Hey everybody, it's Stacie Duffy here, your Denver Metro real estate resource, and I am long overdue for market update. So I have been in the market a lot, so I haven't been making videos on the market. I have multiple sellers, I have multiple buyers, and I've been seeing a lot of different things. And as I've mentioned in my last market update video, which I don't even know when I posted that, it was probably at least a month ago, maybe 2 months ago now, we've been normalizing. It's been shifting. It has happened. It started happening in March when the rates went a little crazy at the end of March. Then through April, things were still nuts because people didn't realize it yet. May, it was like, okay, things are settling out, but we're still seeing the prices for March and April closing, so it looks like it's good, but that's backwards data. June and July, it's like, whoa, what happened? I thought I could sell my house and put a sign in the yard and get 100 offers and people calling over each other. Now I can't. What's wrong? And it's like, okay, market shift, market adjustment, normalizing, okay? This is not some 2008 housing market bubble crash, like, oh my God, it's the end of the world, we're gonna have 1 million foreclosures. Okay, COVID happened and a whole bunch of people lost their jobs and we didn't have a bunch of foreclosures. So there is a lot of normalizing in the market, which is wonderful for my buyers. I have buyers under contract with no competition. I have buyers under contract for less than asking price. I have buyers that have not had to waive any single deadline and have been able to negotiate inspection items and other issues. That has not happened for a long time, like 3 years, long time. So last month we had more inventory in certain parts of the market than we've had since late 2019. So this is I would say the most normal market. I call it, I like to tell my clients, it's a market now. And they're like, well, it's always a market. I was like, no, it was an auction. It's been an auction for a while. It's been hey, here's the starting price and come bring your highest and best bid and hope you're, higher than the other 20 people in line behind you. So we are back to a market. A market has a little bit, a flex between supply and demand and reaction and the opportunity to negotiate. And the nicer homes that are priced more aggressively are selling quicker. The homes that are trying to overprice, that are not as nice or less desirable or not as well presented or not as well marketed, are not selling as quickly. So for July, and I'm quoting July numbers because it's always backwards looking on numbers, right? But for the Denver Metro, our average days on market was up to 14, which, oh my God, it takes 2 weeks to sell your $750,000 house because our average price point on a single family home is $778,000, which is actually down from the last couple of months, just slightly. But overall, I think we're going to, values have dropped a little bit the last couple of months, and I think they'll, drop a little bit, but be relatively flat the rest of the year. I mentioned that in my last market videos. A lot of this is seasonal. It's seasonal in combination with buyers being like, you know what, this is crap. I'm not doing it. Like, I'm not giving away my 3 kids and my, opportunity for any time off and the $10,000 I have saved up just to guarantee an appraisal gap. Like, all that stuff has been going on for so long. Sorry if you're screaming kids. I have kids downstairs, so I'm hoping the Bluetooth kind of knocks a lot of that out. But I've got someone else watching the kiddos while I'm trying to get a market update down for y'all. So it's the opportunity for the market to do what the market does, right? If you position and price and market well, that will return dividends to you. Those are the homes that are still selling in 4, 5, 6 days. I have one seller right now that got an offer the first day we were on the market. Like, showing started right away. Someone came in at 9 a.m., said, yep, I want it. Cool. But her property is very, very nicely updated compared to most of the homes in the area. Those, that particular type of property, there aren't as many available as a lot of the people shopping. Those people aren't subject to school starting, needing 3 or 4 bedrooms in a family-friendly neighborhood type thing. Like, different buyer, different market, different situation, right? And given the season, things tend to be slower in June and July, but people don't realize it's slow until July and August, and then school starts, and then life starts, and then things happen. And so this is that time of year when I usually tell my buyers, like, guys, now's your chance. When you called me in the spring and February and you're like, hey, my lease is up in March or April or in May, and I think I want to go buy something, but I'm not sure, and you couldn't compete because you didn't have the money to, and things were nuts. And I always tell them, please don't sign a 12-year lease renewal, do a month-to-month or do a 6-month lease or something like that that gives you options. Yes, it will cost you $100 a month more. That $100 a month more will be a lot less than having to bid up $10,000 or $15,000 more over other buyers because you're shopping in a spring market. Shop in the fall when you have some leverage and you're not having to compete as often. Okay. So I coach a lot of my buyers that way. So I do a lot of buyer business this time of year for that reason. So I also have some buyer clients that are just relocating, and that happens to be how the timeline worked in their life, and that's the case too. So now is when I've been telling my buyers, guys, the rates have dropped a little bit. They're not at 6% like they were, back up in April and May when they just shot up and everybody freaked out, right? So they have settled down a little bit. Is a 5 or 6% interest rate like to a lot of people? Yes, but now it's starting to become more normal, okay? In the grand scheme of things, that is not the end of the world, and a lot of times it might cost you a little bit more than rent for the first year or so, but you save in the long term because that payment does not go up unless you want to refi to a higher rate, which most people won't do. And a lot of lenders and a lot of economists and forecasters are expecting those rates to continue to drop a little bit towards the end of the year and maybe even into next year, depending on how recession and how economy and things work out. So big picture, guys, I know that month-to-month lease or that short-term lease is going to cost you more than you want, but if it gets you into a better buying time of year and a better leverage position where you don't have to compete and you don't have to bring things you can't, getting a house is better than getting a house in a less ideal or convenient time of year is better than not getting a house and continuing to get frustrated because you can't compete in the housing market and you just hate the world, because that happens a lot too. So I try to set people up for success as far as let's make a game plan that works for you. I do have multiple clients right now, buyers right now, that have hit me up and they're like, my rent is going up like between 10 and 30. I have one client that her rent is going up 30%. So I'm like, okay, yeah, I wouldn't want to pay that either. So, but if you don't have the time, like you don't have the down payment money saved up, then okay, do a month to month, get 1 or 2 months. Like, yes, it's going to cost an extra $400 or $500 out of your pocket. But if that allows you to spend less money and save a little bit more money or get into a house this time of year versus trying to do a 12-month renewal and then just, totally flushing that money down the drain, if you're going to have to pay higher rent, you might as well pay either what you're paying or slightly more versus a lot more and not getting anything for it in the long run. So that's the message to a lot of my buyers right now. Message to my sellers. It depends on the type of property, the ideal buyer for that property, and whether they're impacted by the seasonal timing and things like that. So if I have buyers that have, or sellers that have, ideal young family homes or family homes where people have kids and the kids are going to be in school and, family friendly type neighborhoods, those are going to be more impacted because a lot of those people aren't going to want to move right now, or if they're going to move, they want to do it real quick before the school year starts or something like that. So those are the ones that you've really got to make it worth it for someone to move. And you need to, depending on your situation, for people that have the property paid off, maybe it's worth it to just wait for the right buyer and the right price. And that's their choice. So, or if you don't owe a lot, if your holding costs are $500 a month, why would you do a $20,000 price drop in a week? You're better off holding the property longer because it costs you less in the long term if you can find that right buyer and you're not overshooting it and just waiting to eventually drop the price, which is what happens this time of year. A lot of sellers overshoot because the comps that we have are based on a different market condition. So if 2, 3, 4 months ago, those homes said, this home would have sold for $600,000, and I'm like, yeah, that's the comp, but the market isn't there to support that was there to support that when it happened. So maybe we price it at $575, maybe we price it at $580. Let's see what the competition is, because now there is more competition. We have twice as many listings this time this year versus this time last year. Okay, so I would say 2018, 2019 is like the most representative pattern or cycle for this type of seasonal market that we've had, because the last couple of years have just been nuts. And when we look back for a pattern, it isn't there because COVID was crazy. So, and people had money to spend on homes because they weren't going out and they weren't going on vacations, and they had money to spend on these things that they normally wouldn't. So now we're getting into a little bit more seasonal pattern, and the season for the sellers is don't look backwards, look forwards instead of chasing it down. Let's plan for where we think it should be and what's your holding cost and what makes sense. And then let's position the property as well as we can to entice those buyers. And sometimes it's not that, oh, you know, I made it through a week or 2 weeks. I'm telling my sellers right now, depending on the situation and how you want to price this, I mean, average days on market for the metro is 14. Let's pull your micro market, because micro markets, I mean, markets are very niche based. So I'll put a particular neighborhood and a particular floor plan of house if I have enough properties to give the data set I need to say, okay, so what's typical for this neighborhood, for this type of property in this neighborhood, for this time of year in this type of property in this type of neighborhood, or this. So, and if that typical days on market is 17 to 20 days, I'm like, okay, guys, if we're hitting 3-4 weeks on the market and we don't have an offer yet, we're not doing something right. We're either not positioned well, we need to stage it, we need to, you know, offer terms. It's not always just price. A lot of times right now with these buyers that haven't been able to compete, they need help on terms. And there's creative ways that we can help on terms. You can offer, you know, sellers can offer to help buy down a rate for the buyer back to, you know, 4.5% or something closer to what it was in the spring, to help them lower that payment. There's 2-1 buy down, so you can lower the payment for the first couple of years, and then it goes up a little bit in the second year, and then it goes up to what the continuing rate for the buyer will be. So it takes the pressure off for a little bit and makes it more comparable to what they would be in a rental, with the rent going up each year for the first couple of years. And then on year 3 all the way to year 30, that mortgage payment is fixed for that buyer. So, or a lot of times I have buyers right now, they're like, hey, I'll give them full price, but I need help with closing costs because I don't have a ton of cash and I haven't been able to compete, which is why I'm buying now, because with less cash, I couldn't buy before. But I can get the loan, I just need help with the closing costs, or I need help with, you know, other things like that, or repairs. A lot more buyers that are gonna want things repaired because they don't have the money to fix them. So those types of things you can offer an appliance package. If you have dated appliances and you don't want to spend the money on new ones, but out of the proceeds of the house, you're willing to offer that to a buyer. Have places painted, have them nice, have them positioned well, have them move-in ready, because buyers that don't have a lot of cash don't have the money to make those repairs and make those updates that they want to make. So what I've been telling a lot of my clients and other agents, even when they called and asked for feedback on stuff, I'm like, hey, I have this listing, it's not selling, can you give me your thoughts? I'm like, guys, sparkle sells. People like sparkle because, one, nobody knows how to do anything anymore. Like, nobody knows how to fix stuff or update things or all that jazz. And the ones that do, I get so excited to work with, because I'm like, oh, we have so many opportunities now that are open to you that aren't open to other people because they won't consider doing those things themselves. But sparkle sells. So make it, you know, paint it a neutral color, put in some LVP flooring, you know, do the updates, light fixtures. I'll put a link up to a video up above and down below on bang for buck home updates that I do in my properties. That when I'm looking for a rental property, I want to see something that's dated, because I know I can add that value pretty cheap and get a good equity bump out of it. And that tenants are going to like it if I'm going to do a rental. So I let my my seller clients know, let's have it painted, let's do these updates, let's present it well, let's make sure it photos well, let's make sure we're advertising the things in the area that people may not know about if they're not familiar with your neighborhood, that, you know, all those kinds of things. Offer good terms. If our buyer is going to need some down payment money, let's offer some closing cost credits. Let's offer to do a buy down, a rate buy down. Let's do something that works for the buyer that helps them get into this house. So that's really kind of the market situation at the moment, what I'm running into. And that's more anecdotal than statistical. I know I had a couple of numbers in there, but generally it's more of a market than we have had in a few years. And I will tell you, as someone who has buyers, I am very much welcoming this. Like, the bloodbath is not good for anybody. It's great for sellers that make lots of money, but for most agents, we like having a market. We like being able to advise and to help our clients and have options for them and give them options and ask for things. And it's not just about, you know, sorry buyers, you're kind of SOL because there's 15 other people behind you that are willing to do it if you aren't. So for sellers, yeah, you got to do some work now. Is it still a seller's market? I think so. We're not anywhere close to balanced by any means. Our weeks of inventory for Denver Metro was up to 7 weeks. In other words, if nothing else got listed today, how long would it take those homes to get sold? You know, 7 weeks of buyers coming in and purchasing up those properties. So balanced market is much, much longer than that. Usually 3 to 6 months. as far as inventory availability and that absorption rate. So we are not anywhere close to that, but we are just the closest to a more normal market than we've been in a long time. And it's shocking a lot of people, and it takes time to adjust to a new normal, which I hate saying new normal because we all heard that way too much over the last few years. But anyway, I'm happy we have a normalizing market. So that's my little 15-minute market update rant. Hopefully that was helpful for y'all. If you are looking to buy or sell here in the Denver metro area, please feel free to reach out to me. I love helping my clients. I love advising them. I love giving them options and choices because it is my job to educate and inform you so you can make an appropriate and educated decision on what you want to do for you and your property, okay? Not my property, not my decision. I want you to make those choices, but I want you to have all the information you need to do so. So feel free to reach out to me. My phone number is down below. If you need me in another area, reach out to me. I would love to match you with somebody that's a good fit for you. So I have a link to a form down below. You can fill that out and put in some information to help me make a good match because we're all different. We all work different. I want to help you find someone that's a good fit for you. So anyway, thanks so much for the time and have a great day.